I get it, folks. High interest rates sucks. And, we have this impression that the banks love these high interest rates because they're collecting more interest from us and our payments. Payments are going up. They're making more money. They must love it. And I think on some end they do. But on one end, they don't, and I can prove it to you. So they're also experiencing much, much more bad debt. And people giving up on their loans, foreclosing, power of sales are rising dramatically, even though it's not making news. I don't think they want it to be news. So let's take a look at this. BMO, Scotiabank missed profit estimates as bad loan provisions and costs rise. This is very recent, August 29th, 2023. Let's keep going here. BMO, which bought U.S. regional bank/lender Bank of the West earlier this year, said provisions for credit losses rose to $492 million from 136 million Canadian dollars a year ago. That's basically a tripling, right? Let's keep going. At Scotiabank, provisions for credit losses jumped to 819 million Canadian from 412 million Canadian. That's essentially a doubling in just a year. So bad credit, bad loans, credit losses, so losses on their credit have jumped, doubled, tripled in some cases. In the U.S. example here at Scotiabank, a straight doubling. Okay, TD takes governance lead, posts a $428 million loss, $28 million loss. Published August 23rd, 2022. So, sorry, that says 2002, but it is a typo. I promise you, it's 2002. This is not good. The banks do not like the way interest rates have risen and how fast they've risen, because they're taking it on the chin. Whatever money is coming in is going out the other side. Whatever money's coming in from our payments is going out the other side in bad debt. They don't like it. Mortgage applications are down. Mortgage approvals are down. And as you know, banks, what do? Banks lend. What does a dog need to do to live? There's a saying. Dogs bark and banks lend. If the dog stops barking, the dog is dead. And if the bank stops lending, the bank is, okay? The banks are not happy about interest rate hikes. More interest money comes in one door and then goes out the other in bad debt. How long can this keep going on? My guess is not for much longer. Not for much longer. The big question is, how long is how long? Could it be 6 months? Could it be 12 months? We don't know. But I think this is over in the next 6 to 12 months for sure. Or at least we start seeing the creep coming down.